So Bitcoin is back. It is absolutely smashing records, it's all over the news, and it has pretty much everyone, from seasoned pros to the just plain curious, asking the same thing. What on earth is going on? It feels like just yesterday, crypto was a quiet murmur, and now it's a full-on roar. Let's break down what's driving this rally, what risks might be hiding just under the surface, and, what it all means for you.
Right now, the entire crypto world is buzzing. Analysts are throwing around this huge number, a potential Bitcoin price of nearly $118,000. I mean, after a pretty quiet spell, this explosive jump back into all-time high territory has grabbed the world's attention. And when you see numbers this big, it creates this powerful pull, sucking everyone from Wall Street to Main Street into its orbit. You just can't ignore it.
But behind those big, flashy numbers, there are two really critical questions we need to dig into. First, what's really fueling this incredible surge? Is this just hype, or is there something more solid going on? And maybe even more important, what are the real, actual risks that you need to understand before you get swept up in all the excitement?
Okay, so a huge piece of this puzzle is a new and honestly game-changing financial product, the Spot Bitcoin ETF. The easiest way to think about it is like this. It's a brand new, regulated superhighway for big money. For the very first time, huge investment firms and even regular folks can get exposure to Bitcoin through the same old stock exchanges you'd use to buy a share of Apple. This just wipes away all the technical and regulatory hurdles that used to keep the big players on the sidelines.
And boy, the impact was immediate. These ETFs basically opened the floodgates for what they call institutional capital. We're talking billions of dollars from pension funds, big corporations, you name it. Now we're seeing days where hundreds of millions of dollars just pour in. That's a scale of investment that was just impossible for Bitcoin before. So this isn't just everyday people getting excited. It's a tidal wave of new, huge demand, and it's the main engine driving this whole rally.
But it's not just the ETFs. There's kind of this perfect storm of other good signs giving it a major push. You've got the money supply expanding, which tends to make scarce things like Bitcoin look more attractive. Big companies are now actually adding Bitcoin to their balance sheets, almost like digital gold. And get this, there's even talk about letting people put Bitcoin in their 401k retirement plans, which could unlock trillions in savings. Any one of these things would be a big deal, right? But put them all together and you've got massive upward pressure.
Okay, but now we have to look at the other side of the coin, because there are some serious warning lights flashing. The biggest one is something analysts are calling a price activity divergence. So imagine a super trendy restaurant where the menu prices just keep going up and up, but the number of new customers walking through the door isn't really growing that fast. That's kind of what's happening here. The price is soaring, but some of the basic network activity, like new users joining, is lagging behind. And that disconnect suggests this rally might be more about big money speculating than solid real-world growth.
And this has the experts totally divided. It's a classic market debate. In one corner, you've got analysts like Bloomberg's Eric Balchunas. He's arguing that all this steady, big money is finally going to tame Bitcoin, making it less volatile and maybe even ending those wild boom and bust cycles. But in the other corner, you have influential traders like Arthur Hayes, who are warning that a big correction could be just around the corner, maybe triggered by a policy change or just a shift in mood.
But then, in a twist that just shows you how crazy fast this market moves, Hayes himself did a complete 180 just days after his warning. He announced he'd bought back everything he sold and even dramatically declared he'd never use a stop loss again. I mean, that incredible whiplash from one of the sharpest guys in the market, it just perfectly captures the extreme volatility and, frankly, the psychological chaos of right now. It shows that even the experts are struggling to call the next move.
So how in the world does a regular investor make sense of all this chaos? Well, here's a simple playbook to think about. In the short term, with things being so wild, some analysts would say the conservative move is to take a little profit off the table. For the midterm, those ETF flows still look pretty strong, so a buy-the-dip strategy is popular if you believe in the momentum. And for the long term, the main story is still that steady march of big institutions, which supports the classic strategy of just investing a fixed amount regularly to smooth out all the bumps.
But look,
No matter what your strategy is, this next part is maybe the single most important piece of advice from the experts. Manage your risk. The consensus is pretty overwhelming that Bitcoin should only be a very small slice of your total investment portfolio. We're talking just 1 to 5%. This isn't about being down on Bitcoin. It's about being smart. That discipline makes sure that even if the worst happens and it crashes, your overall financial health stays intact. It's just responsible investing, period.
All right, so to keep track of this story yourself, think of this as your personal watch list. You'll want to watch those daily ETF flows. That tells you what the big money is doing. Keep an eye on those key price levels. They're like psychological battlegrounds. Monitor that on-chain data to see if price and real usage are still out of sync. And of course, stay tuned to the bigger news about interest rates and regulation. Those are the key signals that'll hint at where things are going next. Which, of course, all leads to the multi-trillion-dollar question. As all this Wall Street money keeps pouring in, is it finally going to tame Bitcoin and turn it into a mature, stable asset? Or is all this new cash just fueling the mother of all bubbles, setting us up for an even bigger crash down the line? The next few months are going to be fascinating, and believe me, the entire world will be watching.